Hello everybody and welcome to the True Potential Do More With Your Money podcast. As ever, I'm privileged to be able to announce the end of the month results. This is for the April 2024. It's the start of May. And to help me digest what was a fantastic month for all of us at True Potential, I'm delighted to be joined by David, by Paul and by Ellie. So thank you to you three for joining me today. And before maybe we talk about the month itself, Ellie, this is your first podcast, I believe.
It is, yeah.
So welcome. We don't bite here either. In time-honoured podcast True Potential tradition, we're going to put you on the spot somewhat. So this is your first podcast. Have you done anything else for the first time this month?
Yeah.
Yeah.
I just got a new puppy. So dealing with him is a bit challenging, but I cut his nails for the first time this week,
right,
which was an absolute disaster.
And what's his name?
Tino.
Tino?
Yeah.
After Tino Livramento?
Or Aspria.
Oh,
whichever
Aspria.
one you want.
Yeah, black and white's best anyway. So, no, well, that's good. It's a good start as well, or good thing to know, Ellie, because sometimes we get some of these first time people say, I don't know, and things. So well done for being on the ball with that. And in terms of being on the ball as well, I think it's a satisfying month across parts of the business. I think we had some challenges and some things to digest as well, which we'll get through. But I'll start with the positivity, really. You know, we help clients successfully navigate the end of tax year, which is, you know, beginning of April, and then indeed into the start of the 24-25 tax year. And a couple of stats which I'd like to pull out there. We now have 528,000 clients invested on True Potential across close to £31 billion on our investment platform and into our investment funds. And what was also exciting, we had a record month in terms of the impulseSave technology. We had more than £51 million directly invested by our clients, either via the apps or via the websites themselves. And that's really exciting for us, because impulseSave was something that you, David, and the rest of your development colleagues built 10 plus years ago now. And I remember at the time thinking, you know, we knew what we wanted to do was emulate what we saw in terms of buyer behavior then, and give clients the ability to call action, to be able to invest in their own right without the need to call up their advisor, without the need to send a check in as it was at the time. And when we look backward now, we've had £789 million in total invested via impulseSave, and still moving forward, David, I still don't see a lot of systems like that out there.
No, absolutely, and I think what's key, if we look back at when we launched the web-based and certainly the mobile-based systems and applications, back then there was the question of, is this really what clients want? Will clients actually use this type of technology? Will clients service themselves? And I think the stats and the numbers that we're seeing nowadays really speaks for itself in terms of clients continue to engage more year on year, month on month with the features we're building in that tech stack.
No, absolutely, and unashamedly, we stole the idea of Amazon, which is something we do. We don't steal every idea of Amazon, but what we try to do when we develop not just the technology, but say Ellie's team and the relationship managers, or Paul in investment management, is not put ourselves in our shoes here at head office, is to try and put ourselves in the shoes of the end client and what would they want. And where did we get the idea for impulseSave? It was almost seen as an antidote to impulse buy, which was something which you'd see on Amazon with one-click purchasing. We wanted to emulate that in terms of being able to invest anything from £1 up to £100,000 on your debit card, where it's then split into the wide diversification which Paul and the team oversee there. So a little bit of an insight, I suppose, into how we think.
Yeah, I think there's two sides to that thinking as well. There's obviously everything we do is thought of from the client first, in terms of what would an end client value, what would improve the end client's experience. But the other side of that coin is using the technology to achieve that. So we can come up with these ideas, but what we've really got to do is see it through in our own technology, in our own stack of the different layers between client facing to advisor facing and investment platform. And without that ability, impulseSave would not have been a success.
No, that's a good point, actually.
I think what really sets it apart is, for impulseSave, is speed, and it's simple.
Yeah.
And that's what, you know, is so effective about it.
It's the key to any technology, Paul. I think if something becomes a burden, if many clicks and you've got to jump through many hoops, you just think, forget it. You know, why bother? And I suppose Ellie is probably jump across the. We've got a script and we've got an order here, everybody. So I'm jumping around already, but it's no bad thing. But Ellie, you work in the relationship management team, so you're looking after our central advice clients. When you onboard clients, I think you give them demonstrations about the tech, and is impulseSave, for instance, something you show?
It is, yeah. Typically when we complete the welcome call with the clients, we'll book them in for a demonstration. It's typically booked in for half an hour so that we can cover all sort of parts of the site. Yeah. There's lots of things hidden around that people aren't too sure of, but impulseSave is one of the most important things. Yeah. I think it's a change to technology from handing in checks, and it's nice to teach the older people how to use the things like that online.
And what's the most common thing people ask for when you're doing those demonstrations?
It's actually probably about sending in messages, how to get in touch. A lot of people prefer to use the phones. However, you do also have a online messaging system. Yeah. The messages come straight through to our relationship management team and typically are picked up within 4 hours.
Which is rapid, isn't it?
Yeah.
I remember when we, again, going back in time a little bit, when we built secure messaging, it was very much an idea of trying to remove the link between emails, where it can be unsecure, it can be unaudited, and put it into that encrypted environment with a secure message. So fast forward, and how long have we had the apps now, David? Probably 15 years, do you think?
Yeah, I think, what was it, 2008, 2009, we launched the first iterations. Back on, I think that was BlackBerry as one of the first type of
BlackBerry, and one of the, Windows Mobile. You were actually the guy who built the first one for the iPhone, iPhone as well.
Yeah, exactly. It was good fun back then. It's
you did
it a little bit now.
You did it in your part-time, and it often makes me think, why can't you just work faster these days?
Faster for longer. Yeah.
But it's a subject for a review meeting rather than for a podcast. But look, the whole point of obviously the apps, the impulseSave side of things, is to help people invest their money for the medium to long term and to achieve their goals. And our flagship product with that is the True Potential portfolio. So it's a great chance to jump across to you, Paul, and talk not just about, I suppose, the month that was, but you shared some great stats with me earlier in terms of how they've fared.
Yeah, sure. So if we think about True Potential portfolios, April, we saw a little bit of weakness in equity markets and bond markets, but this is to be expected. We're exposing clients to risk assets. They're volatile, and so they do go up and they do go down. I think if we think about April as alone, we saw a little bit of weakness across the portfolios, but it's coming. We've got to give the context of what's happened over the last 6 months, over the last 12 months. So True Potential portfolios, the balanced portfolio for the last 12 months is up 8%. Over year to date, it's up 3%. So in April, we're down just 1.4%. So clients have been rewarded for being invested, for being patient. Last year was a difficult year, and we're giving the messages on these podcasts. It's time in the market, having confidence in your investment solution, being diversified across different geographic regions, different asset classes, managers, world-class managers with different investment styles to help smooth out the ride for that client, but also deliver good returns.
Yeah, no, and I think the year-to-date statistics in the last 12 months is really important, Paul, because it was a lot of last year was difficult. We kept banging the drum and on purpose about it's a medium to long term investment. You will be rewarded, and we very much saw that sweep upwards. In the last quarter of last year, and indeed into the start of this year as well. And remembering it is that medium to long term gain, and you will, past history is always proven. I know it's not a guide to future performance for the compliance people out there, but it's.
And I think bringing back impulseSave last year. Markets are down, okay, but it's a good time to actually get some money in, do that through impulseSave, and you've been rewarded for doing that.
Yeah, absolutely. And I suppose when we think about what's the outlook in terms of May, any thoughts? I know it's crystal ball time here.
Yeah, I think we, the team, remain constructive as we have been for at least for the last 18 months on the global economy. US economy continues to fire on all cylinders, but what's encouraging is that we're seeing stronger economic data come through in the UK, but also Europe. What is still challenging, and is part of the challenge that we've seen in April, is that inflation in the US remains sticky. It's not coming down as fast as we'd hope, and a surprise to the upside. So coming on to May the 15th, we'll get the next US inflation report. The challenge with inflation is what it means for interest rates. So coming into the year, markets expected interest rates to be cut in the US by 1.5% over the next 12 months. They've had to pare that back now to only 0.25%. The Federal Reserve, we've heard this week, they've also shifted to where the market has, which has been a positive thing, because equities have gone on to rally following that. So we'll be watching out whether inflation continues to be sticky or it can go the other way. And it actually can come under, and then markets will take that as a real positive. And then I'd contrast that to what we have in the UK. Inflation is falling well. It's expected to fall below the Bank of England's target of 2% over the next couple of months. So that makes us a bit excited about interest rate cuts coming. It might be a bit sad, but it does excite me now and again. But the challenge is whether inflation will stay low or whether it'll start to tick up again. So the Bank of England meeting's on the 9th of May, so we'll be watching out for that, keeping up people up to date as well.
Fantastic. A lot to actually be excited about, as you said. Sounds sad or not, but ultimately, if us in this room can't get excited about money doing well and investments doing well, then we're done for.
I keep it simple. If growth's good, which it is, inflation's not really a problem, and interest rates may be coming down, well, we want to be exposed to equities, so we're overweight equities. We've seen a little bit of weakness in April. We're putting a bit of money in, so we're positive.
It's always an opportunity, isn't there?
Exactly.
As you've rightly said. And in terms of opportunities, Ellie, we'll flash across to you now. I think I mentioned at the start of my intro about April being an exciting year as people cash in, make the most of their tax allowances for last year, but actually start to make the most of this year's tax opportunity. So has it been busy?
It's been a very busy month.
Right.
The beginning of April, due to tax year end, last minute people wanting to put in their allowances. We handled that really, really well. But the main focus was going into the new tax year and having those early birds putting their allowances in and helping guide them throughout that process. It has been very, very busy, but we have answered. Our average call time was 36 seconds throughout April, which is amazing.
That's in terms of answering the phone. That's fab, because I think I've seen a stat here where you and the guys answered more than 11,000 calls as well. So to be able to answer them as quick as that, and I know I'm kind of biased because I'm a client of True Potential as well, but importantly, after you wait that 30 seconds, you're straight through to an expert like you as well. You're not going into a holding pattern or what have you. So it's great. So it's a big well done to you and the team. It is great, And what was your busiest query, or your number one query, I should say?
It's actually got to be utilising the allowances, how to do it. A lot of people didn't know about impulseSave, although it's on the app and on the website and things. So almost just trying to drill into them, like, this is where you can do it online. I think most people still expect to like do bank transfers and things like that, but with impulseSave it's super easy to just log on and put it in. It
used to be really early doors, and both Paul and David will probably remember this, when we first set the platform up, which goes back, I don't know now, 13 years or so. I think it's 2012, maybe 2011. I should know. We had to keep the office open past midnight, because provided you got a physical check off an advisor or a client, we could stamp it with the stamp to say we got it on X date before at like 23:59. I remember we had a chap, one of our advisors still is, a chap called Savio, drove all the way up from, Savio lives near St Albans type of way, drove all the way up to Newcastle just to get a check in time. So we were spoiled now in terms of, just as long as the impulseSave before that cut-off period, it's audited, we have the record of it.
Exactly.
There
and I
as
mean,
well.
like, trying to contact any other sort of financial firm or institute this time of year, your average hold time's over an hour. So getting through to us in 36 seconds is a really, really
It is, no, and it's something I do when we have guests here in the office, and you've seen me do this, Ellie, where I go up and deliberately show them, your team in action.
Yeah.
You've got the big screen there, how many people are in the queue and what the average wait time is. So it's Strange Heroes turns green when I walk up, but the stats don't lie there. So well done with that. And did you and the team? I think you and the team had an overdue celebration at the end of.
Yeah, we did last week. Yeah, we went to Lane 7.
Yeah.
It was a good night. Very hungover the day after that.
That's well earned with that. Let's move across back to you, David. We obviously spoke a wee bit about some of the tech we've built in the past in terms of the apps, in terms of the websites, in terms of impulseSave, which Ellie's talking about there. But you've been busy with the next wave of tech as well. And I've got 3 highlights really to pick from. Well, 4 in fact. We've got the drawdown, we've got AI work, we've got annual suitability reviews, and some updates to the wearable tech as well. So, which should we pick on first? Which?
I think the AI is quite an interesting one, given the kind of comments from Ellie in terms of people calling in to the contact team, and actually we're in a great position in terms of 30 seconds to answer a call on average. You can't really ask for more than that or expect for more than that from an end client's point of view. But what we're doing with AI and the secure messaging that we've talked about is we already have the secure message feature, so maybe it's not convenient for you as a client to call right now. It's maybe more convenient to send a message, might be about to get on a train or about to drive and you don't want to be on a call. Maybe you have a query to send over a secure message or what have you. With AI, what we're doing now is we're bringing intent recognition into that area of the system. And what that's allowing us to do is actually answer those queries even quicker from an AI point of view. And we can do that 24/7 throughout the week. So we've brought that into secure messages, we've brought that into live chat, and we've now enhanced that into our advisor proposition as well. And that's the link between the financial advisor and the investment platform. So as an example, you're a client invested in one of our portfolios. You might choose that, actually, I'd like to change my portfolio to balance, from balance to, say, aggressive. You would typically speak to your advisor who will request that if you're one of the centrally advised clients. That can be picked up and processed by AI. So again, much quicker for the end client, and much quicker result, and a more efficient process for us.
And absolutely, and I've seen this in action, and I think it's great. But what excites me as well is I think it allows us to use team members like Ellie to do what you do best, which is actually having the meaningful conversations with our clients rather than almost the administrative type of tasks as well, because, well, you know what your own training looks like here, and you have to be a real jack of all trades here. And I'd much rather you were having the conversations with clients and reassuring them or helping them with some of the other things we've talked about today, rather than doing a switches advice from there. So it's very much, I've mentioned this a couple of times when we've talked about AI, it's not a case of us replacing the team with the computers, so to speak. It's actually a case of an opportunity for us to allow Ellie to do what she does best, which is look after our clients and keep that personality going.
Yeah, absolutely. And I think if you think about True Potential technology, we've built our company formed on technology. We use automation wherever possible. Our view of AI is the next level of automation. It's actually nothing new, albeit there's a lot more we can do with it. It's really just continuing on with our principle where we use technology where it's appropriate for speed and efficiency, and we use people where actually the end client values that.
No, and it always should be. I think financial advice is very deliberately a personality-led business, or industry, I should say, and long will that continue, because those personalities are often the people who got our clients saving in the first place as well. So all for that. And talking about AI, I suppose, Paul, to put you on the spot because it wasn't in the script. No. It's obviously been a big, long driver of some of the tech stocks, with like Nvidia and things in the US.
Absolutely, yeah. And that's, we've benefited, the True Potential portfolios and our clients have benefited because one of our biggest calls over the last 12 to 18 months has been overweight the US markets. By being overweight the US markets, you are getting more exposure to that AI theme, the likes of Nvidia, but also the other tech firms like sort of Meta, Google. They're all big players now, and we've had the latest corporate results come through in April. There's a lot of positives to be taken. Markets are taking it relatively well, so it's certainly a big theme. But now what we're looking for is the trickle down effect of that AI. Yes, Nvidia, the big names are benefiting, but lots of businesses can use it, like some true potential.
Yeah, and certainly it's almost been a bit like in a sweetie shop, hasn't it, when we've been talking, because so many organisations are trying to plug in and do what we're doing, and a big thing we try to obviously do is all the tech we build at True Potential is our tech. It's built by David and the team from there, and it's very exciting when you own your tech and you can design tech just for True Potential. It means AI developments and things really zone in and suit our clients.
Yeah, there's a key principle again in line with what we do in terms of it's our tech. There's actually quite a risk out there at the minute in terms of, yes, there's lots of types of AI, and there's lots of enthusiasm and excitement about what we can do, but the risk is that companies are going to kind of partner or integrate with various third parties to implement a feature, and further down the line they're going to run into a problem because you now have 10 different systems as opposed to one. So it's quite deliberate, and it's something that we're working hard on it at our end to maintain our focus, to say, well, what is the correct tech, what is the correct experience, but how should we build that into our stack?
No, it's exciting. I think it's one of these things. I'm certainly find that the more we do, the more subsequent ideas we have, and the more dev from there. So I think very much watch this space, I think, ladies and gentlemen, with that. And Paul, it was interesting when you mentioned Meta there, who obviously the owners of Facebook as well, because Greg Long, who's just sat back there, talking about buying a lawnmower this morning. I was then sad enough to go on my Facebook just before this, and the first advert I saw was for the brand of lawnmowers that Greg was talking about. So the computers are listening.
Someone's listening, aren't they?
And a big no thank you to Greg for now spoiling my Facebook feed with his boring lawnmower searches on there. Another bit of tech, I think, David, which is far from boring, is wearables. You know, and so we've gone way back in the past in terms of, you know, we weren't just the first company of our type to build an app for an iPhone and what have you. We did the same with Apple Watches. We had some Google Glass, which Paul's wearing today, from there. But you know, we've almost resurrected those ideas, and you've
Yeah, absolutely, and I think it talks back to what we were talking about earlier on in the session, where we were saying, well, will people value a mobile app? Will people value a website? I think that's generally proven nowadays. So recently we relaunched our Apple Watch implementation. So rather than even getting your phone out your pocket now, you can launch your watch. You can see your portfolio values and breakdowns. You can also skim through some of our media content and the IM team content and listen to podcasts such as this. We've got Android coming next, so we're in testing with that. That'll be coming out in the next month as well.
We tend to lead with Apple because they're the most difficult to build for. If you crack it for Apple,
they definitely have their approach, which kind of governs how we approach it. But yeah, it's a good place to be for us.
And the wearables is interesting because you mentioned about the media in particular, and you know, I've say Jamie Sexton, who's a keen runner and a very keen Apple Watch enthusiast, does drive the podcasts on his watch when he's out for a jog now.
Yeah, that's exactly the point. You don't need to take your phone out of your pocket. It's even more convenient than it has been in the past. Yeah,
so excited to get that. I've just got a cheap Fitbit, so it's
you have to upgrade. Don't do a Fitbit.
I know. Look, we'll spin off on here, and we'll talk about a bit more about what we've been up to in terms of the community side of things, everybody, because I think we had a great achievement, I think, in terms of helping the Newcastle Hospitals charity last month. We raised just shy of £3,500 for those, and if anybody hasn't had a chance to watch the video, I was lucky enough to be joined by 3 of the team from there just last week, in fact, and that's on our YouTube channel. So if anybody hasn't had a chance to watch it, please do so, and you can hear about the great work which the charity does there. But for us, raising £3,500 was fab as well, because we had a challenge internally amongst the staff to raise £7,000 to get a sensory trolley, which was spoken about on the video itself, and the great benefits that sensory trolley will bring. And as good as our word, why am I zoning on 3,500? Because we said if we make that from donations from the likes of you 3, we'll then double it as well. So mission accomplished, so to speak, with that. So thank you to everybody who's chipped in and helped with that. As we move across into other side of things, the Harrison Foundation, which is a partner at True Potential, as you can guess by the name, it's my family's charity, but True Potential are kind enough to help support that, and actually it has very strong links with us all here at TP. We've continued our support of one of our local schools here in Newcastle, a school called the Dale School in Blyth. We've donated a further £8,000 there. That's going to be going towards a sensory garden side of things as well. So for those who may remember, the Dale School is the school that we've got that's on a train. Yeah. It's not a moving train, before anybody worries, from there. And that's all about helping children across a wide range of needs, but it obviously being in a different environment and being something interesting like a train can really help stimulate their thinking and excite them for it. So that's a STEM classroom in the train itself, but outside, in terms of the garden, the kitchen and everything, we're building like an outdoor cooking kitchen and things. It's going to be quite exciting for the kids there as well. So looking forward to going in there and probably burning my hand on the fire from there. And last point from me, and I'll pass across to yourselves in terms of what are the things were you proud about in April and what you're looking forward to in May. Something I was proud to be a part of was we published our annual report as well for last year, and it was a great year for us in 2023, and great in terms of the financial figures. And we mentioned financial figures to our clients, to our advisors, and to our staff, not in a bid to show off, but in a real bid to prove, I think, the solid foundations that True Potential has. You know, when Paul's talking about medium to long term investing, I want our clients to know that we're also heavily invested in True Potential, our offices, our infrastructure, to be there for the medium to long term as well. So having solid foundations really helps with that. But I think in terms of picking some of the other highlights there, we've talked about charity there, but you know, between True Potential and the Harrison Foundation, we donated more than £1 million last year across a real range of calls. Ellie and the team, you'd be pleased to know you went above 100,000 client calls last year, 105,000 from there. We helped a lot with education. Peter Bold has spoken on these podcasts before about On the Money initiatives, which is using our financial advisors to get into school and help with financial literacy with youngsters from there, where more than 30,000 under 18s in schools were given On the Money lessons by our advisors as well. So it's a really exciting side of things. And then even looking further forward to the future, and I think something else that you tend to do, Ellie, is helping our clients set up a beneficiary as well. And we've got stacks of videos on here about why it's important to have a beneficiary and how to drive it through yourselves with the tech. More than 109,000 clients had a beneficiary added last year as well, so that's fantastic for us. And if people want help with that, Ellie, do they just ring in to you?
Yeah, simply just ring in, or even send in a secure message. Someone will pick that up and give you a call and show you how to do it online. If you're not so easy doing it online, but can send out some forms. Great.
So we've got all options available. Perfect from there. So if you haven't had a chance as our clients to look at the annual report, if you go to truepotential.co.uk/2023, you can download a copy of it there. We also have hard copies if anybody wants one of those. Please just send us a secure message, as Ali says, and we'll happily sort one out. Right, so what are we looking forward to in May? I'm on the road this month. I'm doing seminars to our advisors, so 10 different locations. I'll get a great chance to speak to, say, probably more than 1,000 of our advisors. We go to illustrious hotels on the sides of motorways where it's easy for advisors to get to and grim for me to stay in, but serves me right from there. So I'm looking forward to that. I love being out on the road. I love speaking to our advisors and our clients. And David, you look keen for May?
Yeah. I think for us, I think what's kind of most exciting is we're going to start seeing some of the shiny technology coming through. So we've talked about the Android watch. We've got some exciting new features of AI which are different to what others are doing in terms of everybody's automating and gaining efficiencies with AI, but we've got some features that actually maybe give the client a different experience to what they've had in the past without stealing Russell's thunder for next month. I think that there's some exciting features that are coming along.
Is that you trying to pass the book and get Russell on next month's webinar?
It's already arranged.
Is it already arranged? Hey, some planning. Nice to hear. Paul?
Well, from an investment team, we're also out on the road. I know they're keen to speak to the advisors on the investment proposition, and some of the changes that we've actually been making in the portfolios at the start of the year have really started to pay off, particularly in April. We've been adding to one of our managers, Schroeder's, doing exceptionally well. And for us, we'll be looking forward to what's going to be happening on the inflation front, interest rate front, and how we want to shift the portfolio. So it's going to be an interesting time for us in May.
That's good. And I think you're right, because you're obviously with me on the road as well, Paul, and it's always good because we get that live feedback from the advisors, who are often dealing with client queries, aren't they? So it's
giving them the information that they need, the sound bites to go back to their clients and give them confidence that their investment solution is being managed correctly and delivering for them, importantly.
And absolutely bang on, Paul. And the other thing I like, as well as hearing those common queries, is also getting an understanding of how people use the technology, what they like about the proposition. So it's like a live feedback loop as well. So that's always interesting. And Ellie, are you hoping for a more normal month this month?
I don't think it'll be much more normal.
No.
May's always good. It's just the same as the beginning of the straight away from the tax year. Utilising their allowances, helping clients on the other end of the phone, but most importantly, sort of helping them get their planning sorted for this tax year, getting them booked in with their advisors if they need to be. I mean, it's only a week wait for an advisor appointment at the minute, which is really, really good. Good
stuff. And I suppose the common message which I know you'd be passing on, but which I advise our clients is make the most of your tax-free allowances as early as possible. I know it's easier said than done for everybody, but obviously if you invest now, you've got a year's worth of tax-free growth versus doing it the day before.
Exactly.
As well. And that tax-free growth, when you're making the most of some of the opportunities which Paul says, is fantastic because you're not getting that tax drag, when it's in the ISA or in a pension itself. So exciting times. Well, I think that wraps things up. So Ellie, thank you very much.
No bother.
Are you going to come back?
If you'll have us back.
Yeah, I'm sure we will. And Paul, you're always coming back. You've got no option. And David's not coming back. He's already said he's getting Russell in next time. But thank you to the three of you for today, and thank you indeed, ladies and gentlemen, for listening about what I think was a fantastic month in April and what's been a fantastic start to 2024 as well. A lot more to look forward to in terms of everything from what David's talking about with the technology, and Paul in terms of the optimism in terms of the markets and what's coming next from there, and even from Ellie and the team as well, who are dying to have good chats with you and prove that the AI is no match for Ellie and the rest of the relationship management team. So thanks everybody, and we look forward to speaking to you again next month.